And then there's China. A lot of the Chinese banks, they're the largest banks in the world, and yet they have an easier sort of rating from the Financial Stability Board than the U.S. banks, like a JPMorgan, that is much stronger on a financial sort of, the power of your balance sheet. So,
it's like through the looking glass, isn't
I
it?
don't get that.
No, I don't get it either. Never did. Look, we have to compete with the Chinese banks, and and people ask me seriously, do you really mean? I really mean it. They have a huge home market. They're going international. Their companies are going international. I want to make sure that America has a JPMorgan Chase too one day. And so some of the rules and requirements that were set up, and I won't go through the detail of them, basically put some American banks at a disadvantage to other banks. And now you see, and I'm not in favor of this, but you see some Japanese banks, some Japanese country, Japan, European countries, China saying they're not going to follow some of these new rules. They think they've become excessive. And so it makes it even harder that, if Americans not only just follow it, we gold plate it, and they don't have to, that can make it worse. So I'm hoping at the end of the day that those regulators get together and negotiate doesn't be exactly the same, but a generally fair deal for everybody. Financial services should be part of trade too. And so we shouldn't act like that's completely separate. It should be part of trade. We have to compete. And remember, we help all these American companies go around the world and compete around the world.
Jamie, let me wrap it up on the retail bank. The retail bank looks completely different than it did 10 years ago. You've been able to attract younger people. You've got really great marketing. You've got this new Sapphire card. Yeah. Tell me about the retail bank and what you've done to make such an improvement.
Well, let me give credit to a lot of people in the retail bank, Gordon Smith and his team. And first of all, we've always been investing in branches and technology and ATMs and iPhones and services. The millennials love, I think 57% of our new accounts are millennial. People always say millennials don't like banks. I say, yeah, I always say until they get that first paycheck. And all of a sudden they say, what do I do with this? And they love the direct deposit, moving money. We have a whole new round of products and services coming. Gordon and his team, Gordon came out of American Express, his team came up with the Sapphire, which was so good. We announced it's going to hurt our results this quarter, because it's just the additional, effectively the marketing expense on it. And so it's great. We're using technology in a million different ways to drive better products and services. And you're going to see this year, one after another, things coming out. Some may be in beta, some may be real, some may not work. I always tell people it's fine, they don't all work, but some really exciting products coming out.
Did you say 57% of new customers?
Our new accounts in the retail bank are millennial.
That's terrific. I mean, at some point, they are going to have money.
Yeah.
And they'll be loyal to JPM, you hope.
Yeah.
Are you going to be able to pay out more money to shareholders? Talk to us about that. Are you going to be able?
I have to demur on that one because of where we are, but we'll talk more about that on Investor Day. And
okay, because people want to know if you're going to be able to pay 100% out, 100% of earnings out to shareholders.
Well, I have a different view of that. You have to go back how I looked at what's paid out to shareholders. So I've always believed you have a consistent dividend policy. The next thing you really want to do with your capital is invest in the future. If you have opportunities to invest in the future, I'd rather do that than buy back stock. And the last thing is, if you buy back stock, it's not the same thing buying back stock at this price as it is buying back at that price. And so I think you have to determine how you're going to handle that over time. What your growth opportunities are, what price you're buying back the stock, and then do what's in the best interest of the shareholder.
I also remember when the feds were being so strict in terms of what you can pay out and how much you can pay out. You said, oh yeah, well, we'll just do a special dividend. Would you scrap a special dividend if, in fact, you were able to pay dividends better and on a more normalized basis?
Yeah, so I'm not in favor of a special dividend. I just think if you end up with too much capital that you don't have any way you can use it in the short run, and think of 2 or 3 or 4 years, and your stock is very high, you don't necessarily think you're doing your shareholder a favor by buying it back, that is a rational thing to consider. That's not my favorite outcome.
My very special thanks to JPMorgan Chase Chairman and CEO Jamie Dimon in San Francisco.